y esas fuertes subidas que registraron algunos índices como son los índices americanos. Vamos a hablar ahora con AllianceBernstein, con Robert Milano, que es Senior Investment Strategist y Head of Emea Equity Business Development en AllianceBernstein. Así que vamos a saludar ya a Robert. Robert, thank you so much for being in Negocios Televisión. It's a pleasure. Good afternoon.
Thank you very much. Good afternoon. Always happy to be here.
Robert, how have the Magnificent Seven accounted for the increase of the stock market in 2023?
Yeah, look, I think it was a really interesting year because it defied many investors' expectations to start the year, right? Coming into the end of 2022, we had a very aggressive drawdown in the market. I think there was still the expectation that the market and the economy would contract and we would see continued volatility. But early in the year, we did see this big boom and excitement around AI, generative AI, and what that could mean for the market more broadly, and what that could mean for productivity and overall growth. And a very small subset of names that we now know as the Magnificent Seven really drove much of the market performance in 2023. So there's a display that we were looking at when you look at the MSCI ACWI and all other stocks in the market, and you look at the Mag 7 in particular. They drove most of the performance for the broad global equity market in 2023. When we look at the right-hand side of that display, there is a number of kind of country indices there, and what we saw was that largely U.S. and growth-oriented stocks drove the market. The MSCI ACWI returned 22% in dollar terms last year, and then other country and regional indices trailed behind quite a bit. So really was very dominant as a driver of market performance last year, which was uncharacteristically concentrated as compared to history, recent history at least.
Robert, what should be our priority now in our investment thesis? But that's my next question. But first of all, I wanted to ask you as well, what are you expecting for markets in the next few years, considering how narrow the market has been lately?
Yeah, so when we think about this year, or this year being 2023, in comparison to recent, modern history, looking back to 1990, this is actually the third worst year for the broad market versus the cap-weighted market. So the MSCI ACWI equal weight, or MSCI World equal weight, excuse me, has underperformed the MSCI World by about 7% this year. The prior two worst years were 1997 and 1998 in the lead up to the tech bubble. So that concentrated performance of the cap-weighted benchmark continued from kind of 97, 98, 99. But once that broke and once the market began to broaden out, the equal weighted index outperformed the cap-weighted index for about 7 years straight. Right, so it went from 2000 to 2007 in the lead up to the global financial crisis. So it's very hard to call when exactly that shift from the cap-weighted benchmark to the equal weighted or the broader market is likely to happen. But looking at history, we can say that when broadening happens, it can persist for several years. And we think about market conditions this year. We've got a lot of uncertainty really around the path of interest rates. So I think many investors got very excited at the end of last year that the Fed would be very decisive and very aggressive in how quickly and how aggressively they reduced rates. And it seemed like we're going to navigate a soft landing effectively. So that there is some room there for volatility if maybe the Fed determines that they're going to cut rates, but they're going to do it later, or they're going to do less than expected. There is room for investors to kind of drive downside volatility in markets. So it really is going to require selectivity. Also, we don't necessarily know the path of inflation, but there's a lot of geopolitical risk which could drive ongoing macroeconomic volatility. There is many countries this year who are having elections, and that could drive significant volatility. So we do still think that equities offer an attractive growth opportunity, but we want to be very selective in what kind of equities we own in this environment, because you need to be mindful of those companies that have better control over their fundamental destiny, maybe that are less exposed to some of these extraneous factors.
You've just mentioned where we should invest right now, or at least what our priorities could be, and I wanted to ask you precisely about this. What should be our priorities now in our investment thesis? For example, focusing on quality companies?
Yeah, that's actually exactly how we're thinking about things. What we're given kind of the many cross currents and the many uncertainties that we face, we think that quality companies make sense, and we also think that investors need to exercise discipline. Right. So when we think about quality companies, looking at some quality factors, whether it's profitability as measured by ROA, lower beta, free cash flow yield, ROE, for instance, many of these factors are not overly expensive, right? You're kind of moving between being fairly valued and being cheap. So we do think that being very selective in the types of companies that exhibit these characteristics, amongst others, can offer some more stability for investors, where you can get more durable growth, you get better balance sheet quality, companies have more control over their destinies, as mentioned. And when you look at the valuations in the market, away from just tech and consumer discretionary, where we saw much of the market's outperformance last year, other parts of the market do look relatively cheap. You know, we look at 2022, the valuations of more defensive parts of the market, for instance, typically thinking of utilities and healthcare and consumer staples, those were expensive parts of the market because many investors flocked to those businesses given the uncertainty and the drawdown in equity markets. When you look at 2022, tech and consumer discretionary was a little bit cheaper. And then with all the generative AI optimism this year, that drove significant outperformance and valuation expansion. So comparing 2022 to 2023, for some of the more defensive parts of the market, valuations have actually become really interesting. But of course, you have to be focused on those companies where you have solid levels of earnings and cash flow growth, you have still good balance sheet quality, good profitability, and where valuations we think are interesting.
Robert, in terms of company sectors, you're especially focused on healthcare. Why is this?
Yeah, healthcare continues to be a really interesting part of the market to us. I think many investors, as we kind of just talked about, view it as a more defensive part of the market. And rightfully so. I mean, there's a great need for investors or for patients to access the healthcare system, right? You can't really put off in perpetuity your need to get a hip replacement or heart treatment or any other kind of procedure, for instance. So there's an inelasticity to the demand in healthcare, which helps to provide resilience and consistency in fundamental performance for many of these companies. But also, there's a lot of innovation in the space. So when we look at kind of things like the tremendous amount of data in the healthcare space that is still not really well used or well organized, there's opportunities in AI, for example, to take that data, make it more manageable, make these businesses more efficient, improve the outcome for the patient. So what's interesting is that you get a interesting combination of both defensive characteristics as well as offensive capabilities. So when we look at 2023, many parts of the healthcare sector underperformed pretty meaningfully, despite having still reasonably attractive levels of forward growth. You look at 2024 growth estimates, pharmaceuticals, for instance, are expected to see kind of 23% earnings growth over the next year based on consensus. You look at healthcare technology, close to 16%, and many of these companies were flat to slightly down last year. So valuations within the space remain quite interesting, and you've got a really attractive opportunity for longer-term growth, given the need to continue to innovate to help make sure that we have the tools, the procedures, the drugs to treat many of the ailments that we still don't have treatments for.
Milano, Senior Investment Strategist and Head of EMEA Equity Business Development at AllianceBernstein. Thank you so much. It's been a pleasure to have you, Robert.
Thank you. Always a pleasure. Take care.
Bueno, pues nos hablaba Robert, entre otras cosas, de los riesgos ahora mismo geopolíticos que también pueden suponer más volatilidad en los mercados este año 2024. El año pasado fue bueno, vamos a ver este año hacia dónde nos dirigimos, pero desde AllianceBernstein nos sugieren centrarnos en compañías de calidad y en cuanto a sectores, el de salud. Hacemos una pausa publicitaria y enseguida volvemos, pero nos vamos hasta Davos de nuevo porque ahí comienza enseguida la comparecencia de Emmanuel Macron, el presidente francés.